Hey everyone, hotel and gaming operator Las Vegas Sands reported second quarter 2023 earnings results. So in this video, I'm going to review those financial figures. I'm also going to update my recommendation on Las Vegas Sands stock. Going into this report, I had the stock rated as a hold, and I'm going to update that recommendation. You're not going to want to miss that to see if I'm upgrading, downgrading, or keeping it the same. So let's get right into it. Starting with total revenue, which came in at 2.54 billion, that was a huge jump from the 1 billion in the second quarter of 2023. Second quarter of 20 from the second quarter of 2022, but still down from 2.8 billion in the second quarter of 2019. Now, Las Vegas Sands has a considerable amount of its revenue coming from Macau and Singapore, and those economies have yet to recover as strongly as the US economy has in terms of the economic reopening, which I'll talk a little bit more about later on in the video. Diluted earnings per share of 41 cents was a huge improvement from a loss per share of 38 cents in the same quarter last year. And like I mentioned, visitation in Macau of 6.7 million people was 68% of the 9.9 million during the same time in 2019. So although they did reopen the economy, it's still rebounding, it's still recovering to the levels it was at in the same time in 2019. And that's true for the most part in worldwide hotel and resort spending. It crashed from 1.5 trillion in 2019 all the way down to 610 billion in 2020. And this whole time since then, that spending has been recovering, but it's still behind 2019 levels. The estimate for 2023 is that worldwide hotel and resort spending will not surpass, it will be somewhere between 1.1 and 1.2 trillion. So it will still be 300 billion below where it was in 2019. So while we might feel like the pandemic is behind us and we are moving forward, there are still remnants of that devastation, and there is still recovery to happen to reach back where it was in 2019, which may or may not ever happen, right? Forecasts are expecting the recovery, but it may not ever happen. I'm in the camp that worldwide hotel and resort spending is going to surpass the levels from 2019 because there's tremendous amount of pent up demand that consumers are unleashing right now. Cash flow from operations of 941 million was up from just 9 million in the second quarter last year. So the company has recovered from the worst of the pandemic. It's on its path to expand, grow. In fact, it's expanding capacity, adding more locations, primarily in the Macau and Singapore region, to add capacity to prepare for growth. So the worst is behind this company. It's heading forward now. To update my recommendation, I am keeping Las Vegas Sands stock rated as a hold. I'm not enthusiastic about the recovery in Macau. In many of the companies that I follow, that rely on the reopening, demand in China has been slower than expected. So I think this is going to be like a very slow dimmer switch recovery around the China region from the economic reopening. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.